Welcome back. Well, flattened out for the markets. The mid-cap index is now just about higher by around 40-odd points. Remember, when we started this show, the mid-cap index was up around 0.3%. We've seen a worsening in the advance decline ratio, which has come through as well. So around 2,300 stocks advancing to around 1,461 stocks declining. So as maybe the advance decline ratio should come up for you. As you can see, there's a little bit of a narrowing which has taken place. Well, center stage in terms of a lot of the uncertainty that we're seeing in the markets in the past couple of days is due to the geopolitical tensions which continue to weigh on the markets globally, with the rise of a possibility of an Iran-Israel conflict. In other developments, the US and UK have cracked down on Russian metals. Also, US Treasury yields have been surging. To discuss the impact of all of these developments on India, as well as our macros, we have with us Madan Sabnavis, who is the chief economist at Bank of Baroda, joining in. Madan, hi, thank you for joining in. Well, just wanted to start by asking you about what you're penciling in when it comes to Brent crude, considering the variables that we're dealing with now. Are you expecting maybe $100 on it?
Well, at this particular point of time, I don't think we're looking at a number of $100. I think we'll be in this range of around $90 per barrel. And we'll have to see as to whether this particular tension escalates further or not. Now, in my view, I think the way in which things are developing, it does look like that it would be a kind of a status quo-like situation. But in politics, one cannot really tell. So, and I think that if the worst case scenario, of course, is that if there is some kind of an escalation, there would be a case of global crude oil price going up to 100. But I would say the probability is probably much lower, maybe 20% probability, 80% probably will remain in the current range. And from the Indian perspective, the fact that we are not really importing much from Iran. In fact, we're getting around 1/3 of our oil is coming from Russia, which is coming at a discounted price. I think at the present moment, I don't think there is any necessity for any kind of panic reaction on our side.
All right. Madan, I just wanted your thoughts on the way growth is likely to be in India as well. Inflation is a little sticky. From the consumption standpoint, a lot of people are, worried about the lower end of the consumption spectrum, even as premium is doing very well. Now we have the elections. What are your thoughts? How is growth likely to pan out for India? And in that, what the distribution of this growth is likely to be?
No, in fact, given the fact that both SkyMet as well as IMD has spoken of a normal monsoon, I think that's quite significant. Though I would add the caveat out here that a normal monsoon does not indicate that everything is going to be good across all crops and regions. But assuming a normal monsoon and a normal Kharif crop, I think the missing factor which has been there in the India growth story in the last couple of years has been rural demand. So I think, as you have pointed out, I think the lower end demand is something which hasn't really resurfaced since the pandemic. And if you're assuming that things turn out to be different for agriculture this time and rural economy tends to be better than what it was in the last couple of years, I think that we could expect some kind of a recovery taking place in terms of consumption in a more broad-based manner. This itself could also mean that investment from the private sector, which has been lagging in the last couple of years, is something which could also tend to pick up. And therefore, we are quite optimistic about GDP growth. In fact, at Bank of Baroda, we have an estimate of 7.8%, assuming all these good things happen, good monsoon, revival in consumption, revival in private sector investment. But at any rate, I don't think the growth rate will go below 7.5% for 24-25.
Okay, so 7.8%, and you don't expect the GDP to probably fall below 7.5% for FY25. What about inflation? What are you targeting on inflation? Are you changing your model around now based on the variables, based on the fact that metal prices have inched higher?
Yeah, see, actually, when you're talking of inflation, I think we need to distinguish between WPI and CPI. And if we're looking at CPI inflation, we are looking at a range of 4.5% to 5% for the year. And in terms of the developments which are taking place, even in terms of crude oil, like what we started off discussing, saying that if crude goes to 100, one can't rule it out. I think the impact is going to be more on the WPI than the CPI, because it looks like that the CPI is not going to be impacted much in terms of crude oil price going up unless we go to the levels of 100. 120, 130, which we don't expect at this point of time. So I think the CPL inflation will be in the region of 4.5 to 5%. Whatever we are seeing in terms of global prices moving upwards is going to be felt more in terms of WPI. And this is where we could be expecting WPI to be above 3% in 24-25 based on these assumptions.
Okay, all right. That's so more of an impact on WPI in case there is a rise in crude prices. Just wanted your thoughts in terms of what one should consider going forward when it comes to the RBI's decision on rates. Because in the previous policy, the governor clearly indicated that they're not really completely linked to what the US Fed is doing. And now it seems as though the Fed is probably going to cut rates even later. And it might just be a very fluid situation based on the current scenario of geopolitics. Based on that, one, how much do you expect from the Fed going forward now? And how much are you expecting from the RBI? And how linked is the RBI's decision to the Fed?
Okay, first, if you look at the Federal Reserve, in my view, I think the rate cuts are going to take place much later. So what we were expecting probably sometime in June could get deferred by a couple of months, because the Fed will definitely be looking at what's going to happen in this Israel-Iran conflict as to whether it gets resolved soon or not. Because that's why we have seen even the US Treasuries yields going up in the market, something which has also affected the Indian market. Now, as far as India is concerned, I think the RBI has made its statement very clear, I think, in a number of policies that while it definitely looks at what the Federal Reserve is doing, but the mandate of the MPC is to target the CPI inflation number. Now, if we just go by the forecast which the RBI has put out for inflation for the 4 quarters, it looks like that in the first quarter, we are still going to be closer towards a 5% number. It's going to be in the second quarter. So we're talking of the period of July, August, September, where inflation would come below the 4% mark. And then we're talking again of the number going up to 4.5, 4.6%. So in this kind of a cyclical kind of forecast which the RBI has made, I think if at all there's going to be a rate cut, I think the earliest is going to be probably in August, if not the policy after that in October. And we should not be expecting any kind of a deep rate cut, not more than 25 to 50 basis points is what I would tend to think. And even here, we should remember that traditionally, India's had a repo rate in the region of around 6 to 6.5%. And given the fact that growth is very much on the right path, we're talking of maybe 7.8, 7.5, RBI is talking of 7%. I don't think there's any concern saying that there could be any kind of compromise on growth. Because one of the MPC members did talk about growth being compromised at this stage. So I think that is definitely not on the cards the way I look at it. Right. So the RBI could be targeting inflation with more certainty this time.
All right. Thanks a lot, Madan. Always a pleasure speaking with you, putting the sense of all the macros right now for all of us in the next 1 year. Growth, you don't believe, for India will fall below 7.5% as well, with Brent staying steady around $90 per barrel. Let's take a short break. On the other side, we'll get micro. We'll talk about the stocks itself. The mid-cap index is now moved into the red. The Nifty too has broken that 50-day moving average. Sachidanand Uttekar will join in with some trading strategies.